Good morning, XRP community. A fresh anomaly on a popular analytics site briefly displayed XRP trading between $1,600 and $1,700. Let's be clear at the top. This was a charting glitch, not a real trade, and the live market remains near the $3 handle. But these episodes are worth understanding because they tend to surface right when attention and volatility are building. Today we'll dissect what happened, what it means, what it absolutely does not mean, and the levels that matter most as we step into October. First, what is a glitch in market data? Most third-party dashboards aggregate prices from multiple venues using feeds that can include spot, index, and derivatives inputs. If a provider ingests a bad tick, mismaps a symbol, drops a decimal, or merges outlier prints into a rolling index, the chart can momentarily display impossible ranges. That is not price discovery. It is a data quality error. The right response is to verify across multiple exchanges, compare the site's index price to raw spot books, and sanity check against time and sales. If only one dashboard shows a four-figure spike while order books worldwide remain stable, you are looking at a display issue, not a market event. With that out of the way, let's talk price action that does matter. XRP continues to respect a constructive structure just below $3. The roadmap is straightforward and staged. Step 1. Reclaim and hold $3 on rising spot volume for a full session. That converts a psychological line into a working floor. Step 2. Break $3.15 with conviction. That level has capped several failed attempts. Flipping it to support tells you buyers, not short squeezes, are in control. Step 3. Attack the $3.60 supply band, where trapped inventory from prior rallies typically sits. Only after those steps does a $4 test become a credible target rather than a headline. Where does the broader market stand? Majors remain firm, breadth is improving, and several higher beta names are producing outsized single-day moves. Classic pre-rotation behavior. If Bitcoin advances first and dominance rises, altcoins often lag on the initial push and then accelerate once funding normalizes. That's when quality utility names tend to lead the rotation, and XRP is squarely in that conversation because of its role in liquidity and settlement. If you want us to publish a concise levels and invalidations sheet for October, covering price structure, spot volume thresholds, funding and open interest bands, and exchange flow signals, drop the word levels in the comments. We'll prioritize it for the next update. Now the structural backdrop that keeps getting stronger. Bank-grade custody and tokenization stacks are moving from pilots into production across Europe and beyond, with Ripple's institutional platform, built in part through its acquisition of enterprise custody capabilities, supporting large financial institutions as they offer digital asset services. In parallel, payment messaging continues its migration toward ISO 20022, giving institutions richer, standardized data and cleaner interoperability. None of that guarantees a straight line up. It does, however, create a runway where networks that provide fast, predictable liquidity, XRP's lane, gain relevance as volume and frequency increase. Let's tie the pieces together. A glitch on a third-party dashboard is noise, but it is also a reminder of why disciplined verification and staged decision-making matter. The tape's real signals are in structure and flows. Higher lows on the daily chart, expanding spot volume on breaks, stable funding alongside rebuilding open interest, and exchange outflows after red hours. Stack those together, and the probability of a lasting move rises. Ignore them, and a headline can knock you offside inside a noisy range. Risk management is part of the story. Watch for 3 common failure modes. 1. A sharp rejection at $3 with rising funding and falling spot volume, often a tell for a stop run lower. 2. Surging open interest under $3.15 without follow-through, fuel for a squeeze rather than a clean breakout. 3. Large net inflows to exchanges during US close or Asia open, potential supply overhang that can fade rallies. None of these invalidate the bigger picture. They simply dictate pacing and position size. Before we close, a quick look at the psychology of moments like this. Glitches Rumor spikes and outlier prints pull eyeballs, and that attention can accelerate the real move once the market confirms direction. Your edge is preparation. Decide in advance where you add, where you reduce, and where you stand down. Let the chart prove it. Reclaim $3, clear $3.15, test $3.60 with volume, and then, only then, talk about $4. Was this glitch pure noise or an omen of a bigger volatility burst? Tell us in the comments, include your next key level, and say levels if you want the October one-pager. If this breakdown helped you separate signal from noise, share it with someone in the XRP community who needs a calm, data-driven plan for the days ahead.